So I want traders to identify with the big picture of opportunities in a market that continues to break down. A pumping day closing and breakout, 3 higher closes, a first red day collapse. A pumping day closing and breakout, a follow through collapse. 1, 2, 3 higher closes, a follow through collapse. 1, 2 closing and breakout, a first red day collapse again. 1, 2, 3 higher closes and a first red day and a follow through collapse again. A gift that keeps on giving. Traders often look for something up high. They're constantly looking sort of over in markets that are up high for first red day trades, and they're counter trending the underlying bias in a month, or they try to sell markets. They try to sell markets that are up high in the month and wondering why the first red day trade isn't working, and they're counter trending the underlying higher time frame that's driving the move, and they miss the first green day opportunity that coils and explodes for the range expansion continuation trade. We have a market that's broken or continues to break down, waiting for those pump days, the days closing in breakout or closing 1, 2, 3 higher closes for continuation trades, for easy money trades. We can target first red days at the beginnings or ends of new months. How does price behave? And then just having the patience to sit on our hands and wait, because some of these opportunities, as we can see, are going to offer not only the first red day trade, but opportunities to leave trailers in the market for all-in opportunities at the beginning of a move and leaving trailers in to capture and squeeze more out of a potential larger time frame winning setup. Or we may see continued market breakdown in certain instruments in certain months, or again, we can still follow through and look for continuations of markets breaking down. And then whether or not that coil presents in our session in the timing window, whether it's Asia, London, or New York. Not just always trying to sell something because it's up high. That can be the markets that aren't going to follow through. Or we're going to see very poor setups or markets that break down and make us chase the move instead of having coils that explode for large parabolic opportunities collapsing through weekly and monthly lows. So when we have markets that are trending strongly, recognizing the underlying bias, and instead of trying to look for the high all the time and shorting a market that doesn't seem to follow through very well, attacking markets that are displaying weakness and continue to offer first red day follow through trades. We can look at major currency pairs and we can look at their cross rates. So for example, we can get a first red day setup on a British pound pair, major US dollar British pound, and we may see a better setup on one of the cross rate pairs demonstrating similar behavior but a better setup on the other instrument. Or we may see a market break down first prior to a major cross rate pair and offering us easy money heading into the backside of a month, up high, collapsing and continuing to break down into the new month. Once those extremes are broken, the possibility of a market reversing again, first red day, first green day, working our way back inside of a previous selling, higher time frame selling area, breaking down, coiling, continuing to break down, coiling, and collapsing into a new month. Easy money, not just trying to constantly sell something that's up high or buy something that's down low. Where is the opportunity for an all-in scalable follow-through coil when these markets set up with first red day or first green day trades? When you start to identify these markets making lower lows, lower highs, breaking down and staying with these, again, these markets are the gift that keeps on giving. We can scale in when we get our coils, entry, stop loss, and hold till close. So when we look at this market and we see the new timing cycle, new month, we're already into a first green day from the monthly low in June. And with that underlying bias in place, we can follow these markets up. And I want to demonstrate something on our smaller time frame. So we're on a 5-minute chart here, And when we stand back and we're already looking at our higher time frame thesis, we have a first green day. On the first day of a month, we're already in a first green day bias. We get a coil into our Europe-London window, sideways at the high of day level. We have a coil heading into our U.S. session, just in our 4-hour rollover for a follow-through coil. We have another nail and bail opportunity following through in our U.S. window. Now remember, we're getting higher. We're day 1, day 2, day 3 in the new month, closing in breakout. So the higher we go, the potential more volatility is happening. But remember, our thesis is coming from the higher time frame. So if you're on the 5-minute chart and you lose perspective of what's really driving this move, you'll continue to look for coils when you're on counter trend days. Remember what we want to see. We want to see a day that potentially we have our bias in. A counter trend day is a signal. Now for a potential follow through the following day, 1-day counter trend, 2-day counter trend, explosive move. A 1-day counter trend, explosive move. What does it look like on the day? We have a 1-day counter trend, and a coiled market for the explosive follow through in the London session that continues in the US window. So just standing back, the reason why I want you to identify this is that you're going to see opportunities in different sessions, Asia, London, or New York, but it comes from the higher time frame understanding. So traders are looking at they're trying to catch the high on the counter trend day, but it's not going anywhere. It's an MCB, a might come back day. But when we get a close of that day with our underlying bias, do we have a coil in the session that we're trading? If the train's already left the station, I'm not getting in. But if we follow these markets through, we get our first red day once we trade back up to where higher time frame sellers came into the market. We may get an opportunity for a coiled explosive move in the session that we're trading in. The 2 bars right at the top are a Monday-Tuesday pattern. We get a coiled market in our London window. Just highlight that for traders. Coiled market in our London window. It's simple. Don't worry about which candle. Once we have our coil, getting in, placing our stop. Remember, a consolidation sideways after our signal day. Breakout pullback, low-hanging fruit continuation in our US window, continuing the move down. This is why when we have markets moving prior to 8:30 or 9:30, whatever that is, because the higher time frames are already driving this move. We have our 5 a.m. 4-hour candle already trading. The market breaks down and pumps back up into our coil, collapsing and continuing. These are scalable opportunities. It's a Tuesday, Monday, Tuesday, and that's the 1, 2, 3 higher closes from our peak formation, low of the week, low of the month level, a coiled market, and a continuation trade till close in our London window. That market breaks down. When you start to recognize the coils presenting in your session, these are the sort of trades I want to participate in. This is why I encourage traders to shake off the mentality of just trying to catch highs and catch lows. We want to trade where markets can continue to expand the range and maybe even follow through when markets are breaking down. So the whole point of this module is to grasp the concept of broken markets and recognize when we have coils that can continue to break down. These are the free money trades. These are the easy money trades, the ones that are scalable. And then new week, new timing cycle, we could be reaching a point where a market now is establishing the low or high closes of a new month. So a piece of homework is to go back, mark off your daily charts and recognize markets that continue to trend higher and are strong. Recognize markets that are offering continuation trades in the downward direction and continue to break down. We want to see counter trend pump days for ACB potential selling days. We want to see counter trend dump days for ACB coiling explosive long trades. So mark up your charts, go back and study the monthly bias, understand where first red day and green day opportunities continue, stepping back and looking for where the easy money setups are. And as I mentioned with the coil is only used when there is a setup. Putting those on your charts everywhere, you're going to start taking more trades, impulsive trades, and trades that may be just on a messy chart, putting you into danger. You want to stick with the ACB setups where they coil, and we're going to get an explosive move driven by all time frames. Building on the mindset of we're looking for easy money, ones that are scalable in size. The idea is to be taking trade setups where you almost can't lose. That's the whole purpose of the ACB. Now, the simple model, as I keep repeating, because I want to reinforce that mentality to traders, is that my sons are looking for markets that close and breakout, or at the extreme on a Wednesday, high of week, low of week, high of month, low of month, and then a coiled market for an ACB opportunity. But when you master the first red day, first green day on the higher time frame, everything comes from the higher time frame, finding these setups becomes simple because they're everywhere, especially if you start to identify markets that are either broken or potentially are going to be breaking down. So traders, as I've mentioned, a lot of traders in the past, they've gotten a red day the next day. They're trying to sell something that's not set up, and they go, well, this didn't work. But you have to build your muscle memory on what a trade setup should look like, which is why I keep showing the same setup. It's the same setup over and over again. Coil sideways into all time frames, driving the move for an explosive follow through, whether that's in the long direction or the short direction. And then also understanding when you can stay in a trade or leave a trailer in the market because it may continue to follow through on a second day opportunity or even at the beginning of a month. So we have markets that will pump up, and traders will see the first red day, or they'll recognize that we're already in a selling area to the left from a previous selling level. Why can't the market sell off again from there? Why does it have to always be something that's just way up high that we're looking to sell? If a market breaks down, not losing sight that market can continue to break down, giving us new signals and counter trend days for potential parabolic follow through collapses in out of those coils. The sideways coil is a market preparing to explode. So I'm not interested in chasing stuff once it's left the station. I'm looking for sideways. And everything comes off those higher time frames. New month, new timing cycle. We can start a new directional bias. First green day, breaking back down into our low bear. Breakout, pullback, coiled markets for potential explosive moves again with an underlying first green day thesis. Big picture first, then the smaller time frame, the 4 hour, we're looking for extremes. We're looking for where the market has confirmed our thesis, and we can have a worst case max stop loss scenario, whether it's 4 hour, 1 hour, and then identifying that coil to get our risk even tighter on the 5 minute and scaling into a market that is now potentially going to explode and not come back. That's the whole idea. Once it leaves the station, it's not coming back. We're in the move. We're in the money. New timing cycle, new month, new timing cycle, new signal, and a market that may now continue to break down on the backside of the move. New month, new timing cycle, a larger pump and dump template. So walking through your charts, doesn't matter what instrument it is. I don't need, like Richard Dennis said, I don't need to know the name of the market. I can trade any market based on this criteria. But I'm only interested in markets when they coil in line with that higher time frame thesis, and I can scale into them and they're not coming back. So walk through, mark your charts up, start to identify first red day, first green day signals, and staying with those markets and looking for 1, 2, 2-day counter trends, 3 higher closes, 3 lower closes, in line with that higher time frame thesis. Then how does price behave in the session that you're trading? If it's left the station in London and I'm trading New York, well, I'm looking at a different instrument. Same setup, different instrument. We start a new month again. We can have a 1, 2, 3 first red day signal and a collapse back through the low of the month. We get to the low of the month. We get a first green day. Market coils sideways, engulfs, and we start the move again. Low of month, back to the high of the current month, and potentially even higher into sellers from the previous month's broken down market. First green day, first red day, traders. Keep it simple. We get a market that continues to break out, breaks higher, dumps down. We get a first red day, lower lows, pumping back up 1, 2, 3, and a first red day heading into the closing range of the month. Another month that is a larger pump and dump higher time frame template. We can look at different markets in different sessions. So for example, if we're trading Asia, we can be looking at Aussie, New Zealand, Japanese yen cross pairs, as well as the major currencies, as well as metals. But just recognizing when a market is, either broken or we're having explosive moves or we're auctioning back inside of a range. So for example, we're looking for short selling opportunities on first red days. We can look for markets that have pumped up inside of a previous month's range. Pumped up. So we're following different markets. We can follow markets that are breaking down, they're broken, and we're looking for follow-through days in our Asian window, perhaps, or having them on our watch list. This could show up in New York on one of these days. It could show up in London. But when markets are pumping, recognizing we still may be offered first green day trades. We get to midpoint range, third week of the month. We may now be on the backside of a move. And so we're looking for easy money. So we're looking for instruments that have demonstrated either broken behavior or explosive strength or pump and dump behavior. Now, guaranteed, almost every instrument's going to offer 1 or 2 great trades every single month. So even if you're just following, 5 or 6 currencies, an index, a metal, whatever you prefer to trade, but looking at which markets are potentially offering even just a 1-day all-in ACB opportunity off the higher time frame. So we have our Wednesday close and breakout, 5-week low of week, high of month, low of month for a Thursday ACB, but we have other follow-through days when markets break down, pump up for potential ACB. You'll notice 1, 2, 3, 4 days from the low, a 1-day collapse. 1, 2 days from the low, a 1-day collapse. 1, 2, 3, first red day, a 1-day collapse. A consolidation day, another collapse. So sticking with markets that we have the bias potentially behind us, and then identifying in our session if we have a coil, if we have a continuation setup. The coil is the opportunity for the ACB. 1, 2, 3, 1-day counter trend. An all-in ACB. Go down to our smaller time frame. Let's see what type of behavior this particular day demonstrated. This is our 4-hour chart. It's the high of the week, and we have a 2-bar reversal. This is our 4-hour chart, and we have our London candle closing at 9 a.m. New York time at the extreme in breakout. At the extreme in breakout. And we go down to our 1-hour time frame, and we have a 1-bar first red hour closing at 10 a.m. Closing at 10 a.m. at the high of the week on a Thursday at the extreme after 3 higher closes on our higher time frame daily chart in a market that had been breaking down for an all-in ACB, not only till close of the day, but potential follow through the following day. An all-in opportunity collapsing into the closing range of the week. Coming back to what we just spoke about, a market that was breaking down and then pumped up, lower lows, pumped up, coiling, a breakout again. This is a 15-minute chart. So we have our engulfment at the high of the week, entering into our third hour, our 10 a.m. rotation, the market breaking down, closing, coiling sideways, breaking down in London, coiling sideways into our U.S. open window. No major red news until 10 a.m. A market that is now exploding and running away into the close of the week. But that all came back from our original higher time frame thesis. A market that when we started the month, traded off the extreme first red day made at the end of the previous month. An explosive close in breakout on day one, counter to our first red day. Same behavior that we've gone over in the last few videos. A first red day, an explosive bull candle back up, and then the follow through, 1, 2, 3 higher closes from the extreme in breakout, and a one-day collapse. 1, 2 day counter trend, a one-day collapse. Now, you may not get these coils in your session. They may come in a different session, or it may not coil. It may break down prior to a market session setting up. It may react on major red news. The whole point is, though, when markets pump up that are broken, we can look through follow-through days. It doesn't matter if it's a currency, a cryptocurrency, an index, or a metal. Broken down markets can offer fantastic first red day trades. If we're in a market that continues to show strength, those red days are counter trend days. Week 1, week 2, week 3 blowing off. Week 4 potentially closing out the month. Signal day, pop back up inside an all-in collapse to start off the new month. New month, new timing cycle, potential new signal at the extreme. Keep it simple, traders. We'll be going over some more of these in the upcoming videos.